All right, testing, 1, 2, 3, testing, 1, 2, 3. The rain in Spain falls mainly on the plains. The ants in France stay mainly in your ponds. Morning, it's a Friday. I'm just loading up the YouTube chat. One moment, please. All right, cool. So, hey, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, my name is Wayne McDonald. Nice to meet you. I'm the Chief FX Market Strategist for TradersWay.com. Comment allez-vous? Hey, I've been trading Forex for a very long time. How long? Yeah, I'm trying to get this better. There we go. How long? Like 15 years or something? Pretty amazing. So I'll be your guide today. I can answer technical and fundamental analysis. We'll go through the major pairs. We'll go through the yen pairs. I think there's some pretty interesting setups actually on the yens. If you're a bull, if you're a bear, you already have them. Should be a pretty interesting day. So anyways, please get involved, ask questions. I'll cover those pairs. If there's time at the end, I'll cover the pairs that you want. If you're watching on YouTube, please subscribe. The benefit of subscription, of course, is that when I do these events, you'll be notified. Some people said that they're not being notified, so maybe unsubscribe, resubscribe. I don't know if that's dangerous or not, but maybe that's what we need to do. And of course, thank you very much for the thumbs up. If you give me a thumbs up, then I know I'm covering the right things. If I'm not covering the right things, just ask a question. How long did it take me to become a consistent trader? That was approximately 2 years, maybe a little bit longer. But I traded on a demo account for a couple of years, and then I took it much more seriously when things got better, because I was a venture capitalist at the time, and I really loved my job. I mean, most people get in this business because they hated their job. I actually loved my job. And so I found that Forex ended up taking so much time because I was day trading that it started eating up into my professional career, and then sort of vice versa. They started cannibalizing each other, right? And I realized I had to make a decision. At that same time, I got promoted to being vice president of the firm. The company at that time had about 300 employees. We just moved to huge, beautiful offices right next to the Federal Reserve Bank of San Francisco. I had beautiful views of the San Francisco Bay and the Bay Bridge and all that kind of stuff. And so I was going somewhere, right? And I had to make a decision, like, the company is investing into me, into my future, but there's this Forex thing that's consuming my time and my mind. So I had to make a decision, pick one or the other. So I quit and became a full-time Forex trader. There you go, eh? So yeah, to get to that process was more than 2 years, I'm sure. But anyways. But thank you for asking. Yesterday, if you watch yesterday's video, near the end, I talked for about 25 minutes about going through a losing period and how to recover from that and what's most important to focus on. Yeah, no problem. Lots of honesty, huh? All right. So anyways, let's just move on .com. Let's go through our setups today. Oh, and swing traders, if you're here, right? Swing traders, we meet today, right? It's Friday. Let me double check. Friday, August 31st. Yeah, very cool. Very, 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 very cool. All right, so Friday. So yeah, so I got my swing trading group after this. I believe it's 9:30, so I'll see you guys over there. All right, get on with it, right? All right, so going to these yens, they all opened up very nice on last Friday. And they rallied up, and we hit our target. So here's our Aussie yen. You know, this one did not go nearly as far as the other ones. Now, there's lots of reasons for that. Okay. First of all, the RBA is not that confident in their currency, right? But look at this. You have to back up. Where's the resistance, right? So I believe we talked about this. If you are a bear, my nose is running again. Sick of being sick, man. All right. Like if you were a bear, where would you sell? It's a great question to ask when you're both a bull and a bear, right? I guess you should always be asking this question. So we had this inverse head and shoulders. By the way, the target was this circle. Not bad, right? Think about it. We had this drop, and I set up the inverse head and shoulders before we even hit the gray zone. And then it made the head and shoulders. And then I measured the head and shoulders and said it would go up to this circle area back when we were down here. That's sick, isn't it? What does that tell you? It tells you that the market can be somewhat predictable. I mean, not in the sense that it's easy, but it does move in ways that can be understood. You don't know when things will change, I think, is the biggest question. But you know, you can get a good sense of how and maybe why and where and sometimes when you'll see changes in trend. You can get used to price action to help kind of, enter and exit trades. We can start using other technical tools like pivot points to understand targets and entries, and you put all that kind of stuff together. It's not illogical for bears to sell here. It's somewhat predictable, okay? Because if a bear is going to sell high, it needs to go up. We all know that you should sell high or buy low. That's not something I invented. That's I don't know, public domain, right? So if you want to sell high, when we use technical analysis, we not only do we want price to be elevated, but you want to be at resistance. And ideally, you want it to consolidate at resistance, right? You don't want to buy like something that's going up. You don't want to sell something going up because you're trading against it, right? So you need something for you as a bear. You need it to go up. You need the bulls to do their job, because if they do their job, then you have a healthy market, a tug of war between bulls and bears. And really what it often is just short-term versus long-term. And maybe you should look at it that way. Like it's not even bullish or bearish. It's long-term traders versus short-term traders. It's traders getting in for a trade, and then there's others getting out for whatever liquidity issue. They have too much profit, they're assuming too much loss, or they're giving too much back, but they're going back to cash, and then sometime in the future, if there's a trend, they'll want to re-enter the trend. So it's really more long-term versus short-term, right? I mean, even if it's going up, there may be no one actually buying it. It could just be bears cashing out, bears getting back in, bears cashing out, bears getting back in. So going back to this, after all that predictability, which is, hey, we did a good job. That's just simply technical analysis. But if we get back to this resistance area, okay, down, 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 up, up, sell, right? Down, 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 up, up, sell. Okay. Now, I believe I said right? I believe I said there was tons of potential for this to come back. In fact, I'm pretty sure I said specifically 79, 90, or, let's just call it 80. Okay? Now, I don't want it to go any farther. I don't want it to go down any farther. But it can go anywhere it wants, right? Okay? But why is it not too much of a surprise that that it fell? Let's see if I can bang this up. Let's get rid of some of this stuff, because you can see I've highlighted all this stuff for you. This is all in the past, but when we did it, it was all in the future. So we still even have this. Look, I have gray areas. I have horizontal lines. Like, I've marked this out. And if you remember, I even marked it up for the place to where bears would likely live, right? So anyways, this is a great place to sell based on front running, right? Out here. Right? So bears, especially aggressive bears, and I think this was the sell, wasn't it? For bears? Oops. Whoa, whoa, whoa. Okay. It was only here because we did it so long ago, but wasn't that the bearish entry here or here? Right? Remember I said there's two situations now. Like, let's zoom in now. There's two situations here. You'll buy here. That's what this gray area is. Or, and I had this here, and I had this here. Or you sell this retracement. So imagine fibbing it like this. Now, I wouldn't fib a range, but, maybe it illustrates, right? You want to sell high. This is, you could call it a 786. Again, I wouldn't actually fib in this situation. But it gives you this idea that if you were a bear, you have every right in the world when you're down here to think of the lower low, lower high. Now, actually, I just noticed, it's funny how I was looking at the charts and not actually at the analysis. We actually have this drawn. I actually have it drawn. That's cool, right? Okay. So, as a bear, congratulate yourself if you sold at resistance. Okay, great. Lots of potential for that. But this is your risk now. If that's your area of opportunity, right? This is your risk here. I'd be very, 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 very cautious here as a bear. And as a bull, game on. You need to get ready if you're a bull. Cool. Right? ESP. I don't know about that. How about hard work? Blood, sweat, and tears for years. Is that what ESP stands for? Blood, sweat, and tears for years? I mean, look, sitting at my charts every single day for all these years, I look at all this and for example, I know we predicted this Aussie yen step by step by step by step by step by step by step, predicted the inverse head and shoulders before we even hit support. Then we hit support. We priced it all out. Where's the support? How's it going to behave? And then the whole Arctic turtle stuff. And then this channel line and buying dips into the thing and breakouts and pullbacks and measuring this to predict this and drawing that from the right shoulder. All while we're up here. And I love it. That makes me tingly inside, almost. But I love it. Like, that is awesome. I find it amazing. I think it's cool. I'm excited about it. Imagine sitting here every day for 15 years, right? You better be excited about something. That is awesome. But the clarity is I think, once you got your technical analysis down, because I think most of you guys understand a lot of that, if not all of that. The next part is, being like a monk, some sort of spiritual power that says, I'm going to get out here. And you simply do. That you're right. You need some sort of humbleness that the market will give you if you don't have it now. And some weird unnatural humbleness that probably just comes from pure punishment, aka experience. But you need this clarity of the market, of the support and resistance, of the bulls and the bears, of the seasons. And you're never right and you're never wrong. You just are. Some sort of Buddhist, Taoist sort of thing where you did all of this hard technical work, right? You wrote this down, then you got your signs, maybe you scalped along here. Imagine if you were a scalper or 15-minute chart trader, how many awesome trades you had in here. Or maybe you're a swing trader and all you did was buy here and took profit here. I mean, look, that's boring. It's so easy, right? And then you get up here, and the thing is like a Jedi. You're like, right? There is resistance, right? There is no hope. There's no hope. It could go up, but you can't hope. All you know is there is resistance there, and you should probably take your profit, and, right? And just say that's enough. Not only is it last week's target, we never even got past last week's target, but you did ride it from here to here. Now, here's the other thing. Last Friday, right? Last Friday, during the swing trading group, we were a buyer here and rode that up into logical resistance. Maybe that's enough. You bought on Friday, took profit on a Monday. Nothing to be ashamed about. Why did you get out so early? You're like, well, I was really concerned about this longer term resistance, right? So anyways, and if you set this up, like we set this up, right? I mean, literally, I gave you 2 different prices to sell if you're a bear, and we were looking at this. If you took that, dude, great trade. Great trade. Okay. But what's the hardest thing about a great trade? Taking profit. Because you're a genius. You sold at resistance, at a role reversal in the direction of the long-term trend. So if you're such a genius and you made all this money that quickly, you're thinking to yourself, this is going to fall forever. And that's the same trap that these guys got caught on. Will it fall forever? Unlikely. So now you have to be brave enough, right? You have to be strong enough, right? Bono wrote in one of his songs, the lyric, I can't remember the name of the song, but he says, are you strong enough to be kind? I love that. In this case, are you strong enough to take profit early? Now, this might fall significantly further. It probably even will because of the trend. That's what trends tell you, right? But is it the right thing to do to hold on? Okay? So you have to remove yourself now. No. Is this resistance, yes or no? is this a place where bulls will buy? Yes or no? Then you need to foresee, you need to use the force to see these invisible levels, right? It's invisible. You can't see it. Like as a Jedi Knight, I can see the force. I can see that bulls are going to buy there. I can't actually see bulls. There's nobody outside my window, right? I don't have back office data from Traders Way that shows me there are working orders there. I have nothing more than you have. I have this chart. Okay? I know there's bulls there. That's what technical analysis is, if you think about it. You should be able to predict where bulls will buy and where bears will sell. So if bulls are going to buy there, then you need to have the strength and the discipline to do something about it and not hope. Okay? And if you are a bear, right, so you should take some profit there, let's say, and maybe this is what you're doing later today or later next week. Oh, by the way, Monday's a holiday. Okay? So if you're a bear, that's what you should look for. And then now that I look at this and I look left, I already have this grayed out, already have it an orange line. There must be something going on there. That's why I marked it. So I would adjust that. And that, I would take some or all of my profit here. And then try again there as a bear. See if we can get a breakout. Or as a bear, maybe it does this. Right? And you tell yourself you're a genius. Okay? Remind yourself it's a career of thousands of boring trades. Okay? If any of your trades are exciting, you're screwing it up big time. So if you're like, boom, look, I blew through the support, you're like, whoa, dude, you took that risk, right? Thousands and thousands and thousands of boring trades is what you want in your career. Why do I keep getting sick? Sorry, I don't have tissue. It's early in the morning, man. Oh, been sick for so long. So anyways, enough of that. Okay. All right, going back to this USD CAD, we had a cautionary tale that said the only way you're probably going to get a sell off of this is off the 4-hour 21. Okay? Right? And that even, right? So in this situation as bulls, we were setting it up looking for different things like a double bottom or a breakout or all that kind of stuff. But in this case, we blew through all the resistance. This is really moving. How cool is this, right? Anyone still a bear? Are you tough enough to be kind? On mine. I can't remember the song. I was hoping it'd come on. Oh, it's Hold On, isn't it? Hold on. Okay. If you're a bear, I think you still have permission to be a bear. Okay? But you want it higher than this, ideally. Is that right, Johnny boy? Yeah. I can't say you're wrong. Hey, while you guys are here, if you're enjoying today, would you throw down the like? If you like, just let me know. I'd appreciate that. Of course, if you're new, subscribe as well. And if you don't know how to subscribe, in the bottom right-hand corner, there's a Forex.Today logo. Click that and you can subscribe. Super easy. All right, so anyways, bears need to set up their plans. Bulls are long and gone, right? So you can go back into something we did 2 or 3 days ago, and I can't move it over there. I have to back out a little more. Okay, your next plan, guys, if you're a bull, is going to be like this one here. Okay. So what the stuff to the right was predicting, and you can't see this anymore, I have to back out a little more, but okay. As bulls, what we covered a day or two ago is either a double bottom scenario for you, so an up and a down, right? I think what I meant was something like this, up to here, then down to there, right? That was plan A. Plan B would be something like that. Hit resistance, a drop. So it might just be this now, right? Well, I guess I can just get rid of that. What I'm suggesting is maybe it's here, and then down, and then up, that kind of stuff. Maybe it's there, down, and here, okay? But that's what you should be doing now as a bull. Stuff like that, setting that up, okay? You see all these lines over here? There's so many of them, right? What am I doing? I'm highlighting all the support. Well, when we were down here, it was resistance, right? Well, now that we're up here, it should reverse its role in the market, aka role reversal, and is no longer resistance for these traders, but now support for these traders. So if you are a bull, right, you actually want it to come down and up. The only other thing you have is down to the 21 and then up, but that's going to work out to about the same thing anyways, okay? And bears, yeah, you want to sell here. It's not a great place to sell, but you could. You'd want to sell a little higher, closer to the top of the channel, right? Just look at the channel, okay? Pretty high pullback, pretty high pullback. So, you know, and here's what will blow your mind. The up, the down, and then the up back into here, and then the back down all kind of fits the same play. Bears actually want you, bulls, to buy this dip, rally it to the top of the channel, and then bears can sell here probably Wednesday, right? Before NFP. By the way, not this Monday. This Monday is a holiday. Next Monday, I'm going to do the webinar from Napa Valley. You got to buy some wine. So I'm going to wake up at 4 in the morning. Hey, you're welcome. It's only 4 in the morning. No, I won't wake up at 4 in the morning. I'll do the webinar at 4 in the morning. So I'll get up 3:30 or 3, maybe 3:15. I'll get up 3:15 in the morning on my vacation because I love you and I care about you and I want you to succeed. And I'm trying to teach discipline as well, so I often try to lead by example. Then I'll get my tushy home, and Tuesday will just be another normal day. So, once again, you'll go on vacation with me. I think you guys have probably been to Florida 2 or 3 times with me. You've probably been to Hong Kong with me. You've probably been to Singapore with me. Where else have I gone recently? South Africa. We've traded the whole world together. That's the best thing about our world right now, I think. I mean, there's lots of things wrong with the world. But for $1,000, You can go, I think, anywhere in the world now. I think you can go anywhere in the world for $1,000. Delta Airlines and $1,000 can get you anywhere. And I think it's crazy cool. Okay. Oh, cool. Right on. Happy to. All right, so we got a lot of these trade plans already set up. I got, like, you see this? Like all these 9 different reasons why this should fall. We had this as Tuesday's trade plan, I believe. So now that it's Friday, well, it certainly hasn't been going up, and that kind of looks like a head and shoulders down into a buy zone. So it really depends. Are you going to buy it here? Or are you going to buy it there? So you can see up here, I have nothing but a sell, right? And down here, there's nothing but a buy. It's all set up. I mean, I have nothing more to add, except that, we've bet that 21 over, right? Luis, yeah, they leave you. No, I mean, that's crazy, right? $900 will get you anywhere in the world and back. I got an email from Delta. They're like, Atlanta to Shanghai using my miles, because I have a lot of miles. And it was like 40,000 or 36,000 miles. Atlanta to Shanghai direct. They're like, do you want to use your miles? I'm like, 36,000. Sometimes you have to pay that to get from Atlanta to, San Francisco or LA. 36,000 is not a lot. What is that worth? $360 or something? I'm like, to Shanghai? Then I remembered Shanghai's cold in the winter. I'm like, I was in Shanghai last December and it was cold. I'm like, this sucks. It was like 4 Celsius. Shanghai. I'm like, this sucks. Anyways, so look, there's nothing really more to add. If you were a bear, you sold at resistance. If you were a bull, you took profit at resistance. I circled it here. I got a line here. I got a box there. There's a target there. There's a entry there. There's 9,000 bajillion different reasons. And then I already have the down and then the potential up. So that the first up, if you're a bull, is going to be this one. But I think you're going to be out of position. So I really actually want that. Enough said. I could probably measure this out like a head and shoulders and predict all that. But look, that's Tuesday's analysis. It's Friday. You should be spending your money. Boom. How's New York? I like New York. I love New York, actually. Luis Garcia's racking up the Delta miles. Cool. Nothing like Delta first class. The people serving you are senior citizens. I was coming back from Asia or something. There was one guy so old, I swear to you, he was too old to do his job, and all the other people were covering for him. And then the woman serving my pod area, she comes up to me, like an old Jewish woman from New York. You could tell from the accent and stuff. And I'm like, hey, do you have any bourbon? I'm in first class. I mean, the nice first class, right? It was the new seats and all that kind of stuff. The best that Delta had. And she's like, yeah, I don't drink, so I have no idea. I'm like, what did you just say to me? I don't know what's on the menu. I don't know, but I'll bring it to you. If you just tell me what you want, I'll go get it. Like, look, oh my God, like, that's the worst service, but you're like, you gotta love it, it's Delta. Like, all right. You have no, You don't even know what's on your menu. You don't care to know. You're not even going to fake it. Right? And then I'm on Emirates first class, and they have this huge menu. They have the lounge in the back, the Tempur-Pedics, Delta. No, I don't know. Whatever. Nah. So, gotta love it. So what do we do here? Amazing that we hit weekly and monthly resistance and a target. Look at this, huh? Up, 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 down, down. Look at that target. That's sick. Look at that. Sick. Whoa. So it's not surprising that this came down, right? Right? Look at that. Ming says, pound what? Pound what? Pound. So anyways, right? Not too difficult to predict that that's where you should get out. Fibs, monthly pivots, weekly pivots, all that kind of stuff. Okay? Right? The drop, lower high, lower low, coming down into here. The part now, that the decision you need to make now is this profit taking or are people selling? If you believe it's profit taking, as I've already predicted here, you're going to get ready and buy it around this 129 area. That'd be cool if you're a bull. Okay. And bears already would have, chased your stop here. Pound Kiwi, sure. Okay, Ming. Ming, you should join the swing trader group. That's where we front run. Looks like you're trying to front run. Yeah, okay. Remind me, and I'll dive into that. Goldie came down a little bit more than I would have liked. See, I would love for it to just simply kick off here because that's an aggressive move. But you see how I have it all grayed out? The gray area is my sweet spot. Okay? Which is absolutely, totally acceptable for a bull. Absolutely, totally acceptable. You see how this is a higher high? What do I do now? Okay, that's my new entry. Are you tough enough to be kind? Do the da-da-da of your own mind. Hold on. Wow, look at all that. Okay. Does that make sense? So I'm trying to remove some of this stuff because it's already done. We've already planned it. It's already happened. It's so gorgeous. Lovely. I just love a good plan. Okay. Now, maybe we're higher than this, but we're not higher than that. So your plan B on this, which I think kind of gets folded into this, is a range, right? Your plan B is this, but you wouldn't predict a breakout on that. You'd only get back to here, right? But if you're a bull, that's not what you want. So you're going to try to plan something like this, right? Okay. WTI. What? What? All right, going back in the day, this was a buy here or a buy here. So as we know, we got our buy. And then yesterday I cautioned you. I said it's not that it can't go up or that it won't go up. It's that there's going to be caution here and even sellers up here. So now we've been here for 48 hours. And I don't think it's a coincidence that we're consolidating there, right? Look at that. We had this drawn up here all in advance. Okay, so bears, can you see how this may have found some sort of predictable consolidation? Like, I think a bear could consider setting up a sell now, because this might be enough evidence for you of what was the word for it? Weakness? It's not quite the word I was looking for. Vulnerability, maybe? Okay. And you could plan this move here that we did 3 weeks ago. We had this planned out. You could plan this sucker out now. Okay. Okay. The cool thing about this setup is, let's say you just sold right now, 69.88. Your stop could be as close as just sort of here. Okay. Brooke, you should, have you thought about MetaTraders? All right, down, up, down, up, down, up, down, up, down, up. Right? So anyways, there's some vulnerability there that a bear could take advantage of, especially if you've been waiting all this time, right? There might be something there. Okay. Okay, let's move over to the yen-yens. Well, wait, let's pound kiwi. You know what? I don't even think I have a pound kiwi. Pound kiwi, pound Aussie, pound Swissy, pound kiwi. All right. All right. Well, here's the thing. All right, and this goes for all trading in general. Do not let technicals supersede the obvious. Don't do something like it has to fall because it's M3. Okay. Right? Something amazing has happened here. You got to be very, very, very cautious to trade against it. Maybe even stupid. Doesn't mean it won't fall. It doesn't mean you can't do it, but I don't know if it's brave to sell up there. But you got to be very confident, maybe overly confident, right? So don't do something because this is an M3 or something like that. Okay, don't say because of this it's going to fall. The market's going to do what the market needs to do, what it wants to do. It's going to have to do with demand for pound, demand for Kiwi, fundamentals for pound, fundamentals for Kiwi, global macroeconomics in general, dairy prices, Brexit concerns. I mean, there's all kinds of noise in here, okay? Is it resistance? Yes, sir. Okay. Can you sell here? Yes, because it's resistance. Is it trending? No. So lack of trend increases uncertainty, which is another form of risk. So now, if you did sell here, your best hope would be the bottom of this range. So you're going to have to really analyze that now, and catch these wicks somewhere. And that's an M3, so that's an M2, but this is an S. All right, so I would look at this one with great caution and lack of confidence. Okay. You are in a sellable zone. Okay. Sure. But manage it very carefully. Okay. See, what you want all day is up, 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 down, down, buy. 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 You want to just do that over and over and over and over and over and over. Okay. You could sell this faux show, but be careful. Okay. 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 Just be careful, because you could have sold it here, not made money, sold it here, not made money, sold it here, not made money, sold it here, not made money. Now you're selling it here, and you might not make money. Okay. Okay. Doesn't mean it won't fall. It's just that you might find something better. But that is definitely resistance. It's definitely trying to roll over and consolidate there. If you're going to do it, it's a legit opportunity. Just manage it. Okay. Yens. But thank you for pointing that out. Okay. Okay. Cool. I think what you should do here, if you've been around for a while, and I mean, clearly we set all this up. If you've been around for a while, I want you to pay attention to things like the overlapping of weekly and monthly pivots and such. Okay. And then also look at the price action here. How important price action was to all of these. Okay. I don't think there's much more to say. I mean, we've covered it over and over and over again. It's just pay attention, look at these things, like really look at it. Ask yourself, how did price behave? Why did they move in these areas? That we talked about these things down in here, and now that we're up here, what actually did happen? What were the prices that acted as support and resistance? Were they predictable? If so, what should you have done? Were they not predictable? Well, what did you want? All this kind of stuff. What rules of engagement do you know? Like, for example, in this situation here, right? What I teach is that this is out of position. You're a bull, but it's too bullish to use a pivot point structure like this. This is the conservative scenario here. But what we actually do in this scenario is quite different from this pullback, right? And anyone that's gone through the course can attest to this. But what we do use is this 4-hour 21, like for that reason, right? So like you can really start pulling this apart and like, oh, well, if you're using the 4-hour 21, what can happen? What does it even mean? Why does it even do that? Which is more important than like, well, what's Wayne's rule for this? Wayne's rule for this is to buy a pullback of the 4-hour 21 because it's overbought in a bullish market and I'm a bull. Okay, well, instead of memorizing that, like, what does it mean? And how does the market react to that situation of being overly bullish? Well, it tends to increase its velocity, and you tend to hit your targets fairly early. Well, and then this one was like crazy, right? And then look at it and say, well, is it illogical that it stopped here, even though it skyrocketed? Is it illogical that it stopped here? Is it illogical that it pulled all the way back? And I look, there's a lot of information here, and I would say, no, it's not illogical. So what can you remember here? What can you analyze, truly think about, even write down? What were your notes from class, right? Look at this and take notes of every little part. A double bottom, higher high, higher low, superseded by an out of position move. That, right, with the increased velocity into, consolidation and in a monthly pivot and all this kind of stuff. Like, how does it all work together? And what should you do next? And this one's not a very easy one. I can see where bulls are getting excited, but I can see where bears did exactly what they were supposed to do. And there's a lot of information here that I think you should really dissect. It's like poetry. Every word has deeper meaning than what you just see on the surface. Okay, so now we should be getting actively involved on the peso trade. Is anyone thinking about it? Luis says you're doing the mediocre trades at the end of the week on the yen pairs. Yeah, terrible, right? Should have stopped Wednesday. And that's why I paint pictures in your mind, like take your profit on Wednesday and then on Thursday, volunteer at the local museum. Be a docent. Okay. So here's the complicated part here. Brooke is buying retreat. So you're doing the exact opposite. Yeah, okay. Well, that's fine. Today is Friday, and it's the last day of the month. What percentage of people will get paid today versus next Friday? If lots of people get paid today, in Texas and California and Arizona, specifically in New Mexico, right? This is coming down. Are they going to get paid today? I don't know. But 2.6 billion is going to exchange hands. Some of it might be today. Sure, John. You're right. Because the politicians got together and they're hammering out a deal. You're right. Mexicans living in the United States are not going to send money home. Wait, that doesn't sound right at all. No, you're wrong, John. I think people are going to send money home to their wife and their kids and their mom and their dad, regardless of what the politicians are talking about. 2.6 billion will exchange hands in the next 7 days, but more likely, what if half of it goes today? And what if some go on Monday because they, well, in this case, Tuesday, right? Right. So Tuesday, lots of people are at Western Union because they got paid on Friday or Monday or Tuesday, and they all right, and all that hits the market, and off they go. So if you believe in the flow, nothing else matters. Anyone can see. Nothing really matters to me. Right? Just flow, man. Will it drop like a ton of bricks? I don't know, yo. I don't know. Yeah, well, don't believe the hype. Trade what you see. Okay. Yeah. There's an element of truth to that. There's also a huge amount of naivety to that. Trade only what you can see. Well, that means then you cannot predict anything, which would mean you're not an expert. All right. So if you're only reactionary, then at best you're amateur. Okay. So what is it like? The element of truth is we don't know what's going to happen. Okay. But, don't believe the hype. Don't believe the hype. Nah, come on. Don't be ridiculous. So you can have a hypothesis. Doesn't mean it's going to happen. The hypothesis isn't hype, right? It's an idea that needs some scientific methodology to prove or deny, to confirm or deny the hypotheses. Okay? So in that case, if you're at resistance on the last day of the month, which may or may not be payday, and because we have the data, I'm not making it up, 2.6 billion. Not 2. Well, maybe it'll be 2.7. Maybe it'll be 2.5. More likely to be 2.7. But it's not like, well, we don't know. It could be 1.2. No, we know it's going to be 2.6 billion. Plus or minus 100 million. And we know it's going to exchange hands soon. And if it happens, right? Oh, I see. Okay. Yes. Yeah, I get it. Okay. My apologies. My apologies. I misunderstood. But yes, you are right. In that case, don't believe the hype on TV. The hype on TV is also correct. That is a macro issue. But I'm trying to get people away from that. There's so many examples over the last 15 or 20 years. I remember there was a time when we were worried about China and Japan fighting over some godforsaken island in the middle of nowhere. This was, 4 years ago, 5 years ago, 6 years ago, right? You know what I mean? And people were really concerned. It was really hyped up. What if China and Japan go to war? The United States is then going to send an aircraft carrier, and like, oh my God, now now we have superpowers, right? All this stuff. And if it's not that, it's North Koreans. And if it's not the North Koreans, it's the Russians, and all this kind of stuff. It will not move the market unless missiles are in the air. That's what I said many, many years ago. So think of it this way. You have billions of dollars under management, and you've invested over the course of the last 10 years. You bought the U.S. stock market, all kinds of stocks in the stock market 10 years ago. You're up 15,000 points. Well, not quite, but more than 10,000 points on the Dow. What's going to shake you out of these positions? You have billions of dollars invested over a long period of time based on real hardcore analysis of fundamentals and technicals and price and all this kind of stuff. Like, you've made wise decisions, and you have more than just money invested. You have your career invested, your reputation, your spirit or whatever in there. I mean, in the sense that you've kind of your identity is attached with the success you've already built on this portfolio of yours. You're not going to unwind it because of what Trump tweeted yesterday or what they're covering on Fox or CNN, right? So unless missiles are in the air, none of it really matters fundamentally until there's a policy change. They can talk and yell and scream and this and that and tweet, and it's not going to make a difference unless there's something that's going to scare the hell out of someone with $1 billion invested. And suddenly the guy says, or the gal says, oh my God, I have to get out of everything. Well, I know what you're saying, John, and you're not wrong. I'm just trying to get to the next level where it's out there. It's a risk. It's not probably an event or an element of risk that's going to change things long term, long run, all this kind of stuff. But it's important as a risk manager to say, okay, I recognize that risk, but should I adjust or should I be cautious? Because there's all kinds of things we need to be worried about, right? And they're all real. So then you have to really explain what these concerns are to yourself, to your client, to potential clients, to if you're doing speaking, public speaking or whatever, all this stuff, you have to be able to say, okay, that's a concern. We are watching it. It is a probability, but, we're ranking them, we're triaging them, we're managing these risks, right? Yeah, well, then John says, okay, it is a trade agreement, so there was a policy change. Okay. I'm talking about a flow of capital that tends to occur on specific days based on human behavior, not on a political policy, right? So Trump renegotiates a trade deal with Mexico. Okay, good. Definitely fundamental. Is it good for the economy? Is it bad for our economy? Okay, all of that is also important. But will it dramatically change the way Mexicans or Mexican Americans with family in Mexico, okay, will it change, I don't know, 10 million people? What is it, 30 million people? I don't even know. Will it change the Mexican American population of the United States? Will this new policy change dramatically alter the way that Mexican Americans send money home back to Mexico on payday? Yeah, maybe. Right. I'm just making the point where that's the question you need to ask to get to that point, John, right? It might be a good idea, but the filter is it might be a good idea if you believe it will alter human nature to send the money home to mom and dad, to the wife, to the kids. It could be that nobody even knows about this. You know what I mean? Maybe the whole community's talking about it. I don't know, right? I don't live in a Hispanic neighborhood, so I don't know if people know about it or if it's a huge buzz, right? No, and I'm not disagreeing with you as well. Right? You're not disagreeing with me, I'm not disagreeing with you. That's the filter or the lens that you need to look at. Not even that move, all situations, really. Will this alter the way that money flows? No, Cash, no. I don't see an entry yet, do you? I have the price, right? I mean, it should be pretty obvious. It's either here or here. Okay. So we have the first one nailed. We're at the right price. So now we got to drop into here. So, I mean, you could do things like this. Take that shot. I mean, yeah, you could have sold that. I mean, it's just whether you're going to do it or not, right? But the prices are quite easy. Yeah. Well, guys, that's what just simple, basic technical analysis is, right? So do you understand the fundamentals? It's a yes or no thing. And if you think you do, you say yes. Great. So what would you need if you were going to short this? Well, you need to be at resistance. Okay, great. Are you at resistance? Yeah. Okay, good. Drop into a small time frame. Now use, what's your trigger? 5A cross down, Fibonacci, move. You're going to wait for 2155 cross. Do you use oscillators? You can use an oscillator cross. I mean, all of that is, I mean, you can just sell it. I mean, what's the worst case scenario? You're going to lose some money. But since you're not over leveraged, it's hardly anything, right? You can just sell it. Boom, sold it. Why? Well, it topped at the M4 on the day I wanted it to. After a bearish engulfing candle, the Fibonacci retracement at the exact price I wanted it, so I sold it. Okay, great, cool. You can put a stop there. If it goes that high, you lose money. So what if it goes up here and does it again? Shows weakness up there. What if you have a double top up at the R2? Well, do the same thing here. Just sell it. Well, what do I need? Anything. 5-8 cross, 2155 cross, stochastic cross, MACD cross, ADX cross, whatever. It's just like, right? Selling it is like the easiest thing. So what technical analysis do you prefer to use to show you that it's no longer going up? I think knowing where the price in which you would consider selling is far more of an interesting question. Okay, great. So you've identified these two prices. So you're like, well, Wayne, how do I sell the trigger now? Or, but what? So let's change it. So we can go classic here. Let's go classic. All right, cool. Okay. Cool. So now you're waiting to sell it. Okay. You know the exact price you want to sell it. Okay. You have a fundamental reason. In this case, it's a flow. So you're only going to sell it today or maybe Tuesday. You know where to put a stop. You know where your second chance is. So the rest should be fairly easy, right? Do you use MACD? So what about a MACD cross down? Okay. As long as you're at or near, or as long as price seems to have respected and been rejected at the exact price. Remember, you already know the price. You already know you want to sell here. It's been pre-established. So you're like, okay, well, we're there now. Great. Are you going to buy it? No, of course not. You already know you want to sell. You already know that you want to sell as close to this price as possible. Great. Decision's already done. So you don't have to sell, but you know you don't want to buy. Great. So now what is your trigger? You can wait for the 21.55 to cross if you want, and then sell it. You can wait for the 5.8 to cross down, and then you can sell it. You can wait for a 5.8 cross. Let's go there. See, like, none of that matters. The 5.8 cross doesn't make you money. The 21.55 doesn't cross doesn't make you money. The MACD doesn't make you money. The stochastic, they're just algorithms that measure that price is no longer going up. So any indicator you want, I think. I haven't tried them all, right? But almost any indicator that will give you the information that this is no longer going up at the exact price you want to sell, you can use. But the fact that you have a fundamental hypothesis and you're using technical analysis to confirm that the market's being rejected at your price, that just puts you in, and the rest is risk management. If it makes a higher high, you probably don't want to be in a short, right? So all of this is elementary. Where it gets complicated is when all you have is this. And there's lots of traders like, well, oh my God, how do I know it's going down? Well, I need my MACD and my Stokes and my oscillator. There's nothing on this chart that tells you this is going up or down. That's the issue. If I told you that today or on Tuesday, because Monday's a holiday, right? In the next 2 trading days, if I told you that I had insider information, okay, that this is a thin, illiquid market, and I know a trader's coming in with a $2.6 billion trade, that at least on the short term will likely move this market down. That should influence your decision-making process. So now you just need some sort of sign that that trade has been entered. Okay? So some people might just sell a triple top. Right? If this is a price you think is important, okay, you could say, well, I really want to sell at this price. Cool. You can say, well, that's a triple top on the last day of the month with my flow coming, so I'll take a shot there and put a stop there. That's not, you're not really using any technical analysis per se. You could do it. So how could you remove a little bit of risk from that? Well, at least have a stochastic cross. Okay, great. What does a stochastic tell you? Stochastics is measuring the price, now remember how I set price and market aside? I separate price and market. It has nothing to do with market. It's measuring price's ability to produce higher highs relative to the recent candles. Okay, so for us to get the stochastics to cross down, we cannot have a higher high. Impossible. It's not how the algorithm works. We have to stop making higher highs. See, here we were making higher highs relative to the earlier candles. And I have this super sensitive, so I mean like much earlier candles, right? Like these candles. So suddenly you're making higher highs, right? Here, we're not making higher highs at all, right? In fact, when it crossed, we made a low, a lower low. So if this crossed down, the algorithm that you're using to measure price is telling you two things. We're not making a higher high above your resistance line, which might technically be important to your fundamental flow trade, okay? But in fact, because it crossed down, price on a, what is this, a 4-hour chart? Really? On a 4-hour chart, right? Price on this 4-hour chart is now making lower lows. And that would be important to someone that's saying, I want to confirm that $2.6 billion is entering the market and bringing the market down. Well, you could say, well, at my exact price I predicted, price has been stopped in its tracks and is now trying to make lower lows. So you could enter a trade saying that it's been confirmed by stochastics at the exact price you wanted on the exact day that you wanted for the exact reason you wanted. So you sold it, then you put a stop loss. Now you have identified the exact risk that you're taking, got the exact price you wanted, confirmed it technically and fundamentally, and now if you get it right, it's going to fall. How far? Is it going to fall for a couple hours, a couple of days, a couple of weeks, a couple of months? Nobody knows. Nobody knows it. Sometimes it falls for a few hours. I've had it fall for 2 months. We don't know, but you've identified how much you're risking, and that's where your stop is. And if you get it right, you'll have an opportunity to move your stop and remove your risk totally. Okay? Then John says, I'm going to fold some other technical analysis on that, which is fine. Now, I don't get too caught up in that because this isn't even really a technical trade for me. I'm just trading the flow. See what I mean? Brooke says, oh, and we got the daily. I don't care about that. I don't care about the daily pivot. I don't care about the long-term trend. I don't care about old support and resistance, all that kind of stuff. I mean, it's not that they're irrelevant, but I'm trading the flow, and I'm trading it today. You see what I mean? It only matters to me today and Monday. That's it. It either falls now or it doesn't, because it's not a long... The guy at Western Union in San Diego sending money across the border to Tijuana through Western Union, right? He's a gardener. Gets paid on the last day of the month. So he goes to Western Union, wires it to his wife and kids across the border in Tijuana. That weakens the dollar, that strengthens the peso. Okay? Oh, okay, Brooke, sorry. But you know what I mean? So Pharaoh says, would you sell it here for your buy? Well, once I got my technical confirmation, right? So how about this? Do you have it on 1 hour? Not quite yet. 15-minute? Yeah, you could have done it already. These are your decisions. Okay? How aggressive are you? How many times are you going to take it? I mean, you can say right here, right now, every time it's overbought on a 15-minute chart, I'm going to sell it. Yeah. Well, just remember, we're only talking about a peso trade. Okay? And I'm trying to get the psychological part of it across. Okay? I'm trading insider information. I'm making a trade because I'm assuming 2.6 billion is going to change hands, if not today, on Tuesday. So if I can confirm it's in the market, I'm taking the shot. That's it. That's the only logic. Now, wouldn't it be ideal if we were at hardcore predictable resistance as well? Okay. Well, I wonder if we can find that. Oh, you mean this triple top is logical and predictable? Well, holy schnickerschnocker, that makes it even more interesting. Doesn't it? So then you're like, well, maybe I should have it in this situation. I like all of this, Wayne, but I would like to have an oscillator. All right, well, let's do oscillators. Let's throw down. How's that one? You're like, well, it's already down. I must have missed it. Okay, well, then you better cut the corner. By the way, you know how to short-term trade. What do you do after a lower low? See? Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 up. Oh, hit resistance. Guess what? It stopped going up. Then you get down, 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 up, up. See? See if I can add to this a little bit. Okay? We're on a 5-minute chart. It's called scalping. Right? Up, 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 down, down, buy. Why here? Because this used to be resistance. Okay? Up, 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 up. Look, new higher high. Look left, drag it across. That's your new buy zone. Down, down, buy. Up, 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 up. New higher high. Look left, drag it across. New buy zone. Down, down, buy. Up, 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 up. Hit your target. Stop trading, bro. You're done. Okay? Double top, lower low. Look left, drag it across, right? Down, 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 up, up, sell. It's easy, right? Right? Anyone that's signed up for like summer school and all that kind of stuff looks at that and thinks it's easy peasy lemon squeezy. You're like, oh, yeah. For me, I think putting together the idea is the moneymaker. Trading it should be easy, right? It's knowing when to buy it and when to sell it that's the more difficult thing. But selling a falling market, that can't be that difficult. Yeah. And remember, you want, what did I say to begin today's webinar? You want your trading career to be thousands and thousands and thousands of boring trades. If you're doing anything exciting at all, you're royally screwing it up. And it's only exciting because your adrenaline's pumping and probably because you're trading too much money, or you're taking on too much risk, or you're throwing down a trade like a bet, and you're like, I bet it's going to fall here. No, I didn't say that. I said your hypothesis is it's going to fall here. But then you use technical analysis to get in, and that should be the easiest part. That should be the boring part. You're like, oh, look, Wayne, you're totally right, Wayne. Oh, my God, Wayne, it's falling at $19.20. Yeah, I know. Right? Like, I know. Isn't it supposed to? Like, what was it supposed to do here? Go up? Well, I just thought we just talked about 2.6 billion. Oh, is the market opening? Did Western Union just open? Oh, well, that's weird. Right? That's weird. Funny how that happens. So I hope you appreciate it. I'm not trying to come across as condescending. I'm trying to come across that it's plausible. I don't know if this trade's going to work out. I don't know if people are sending money home today. I don't know if the new policy between the country of Mexico and the country of the United States is going to change the way people behave, right? I'm talking behavioral economics now. I don't know if this policy, which is international political economics, right, which I've studied at Harvard, or whether it's behavioral economics, which I've also studied at Harvard, which one is which? Well, this is a behavioral economic play, right? Will it work out? I don't know. But that's why we use technical analysis. That's why we're fundamental analysts. Then we're technical analysts, right? And then we're money managers. But it's not that we're managing money. The money just takes care of itself. So we're risk managers, right? Right? Macroeconomics, central banking policy, technical analysis of price and time patterns, and then risk managers. The rest is easy, right? So I got to go because I got to meet with my swing traders in a half an hour. I got to go. I haven't even eaten breakfast. Yeah. So anyways, peace on earth. May the pips be with you. May your profits be above average. Thank you so much for working with Traders Way. They're good people. They care about you. They want you to succeed. That's what these webinars are all about, right? It's not about get rich quick. It's about blood, sweat, and tears for years. But I think you and I working together every day makes a difference. And you'll get it. You'll get there. So I'll stick with you if you stick with me. Thank you for being a client. Please give a like. Please subscribe. And I will see you Tuesday. Enjoy the holidays if you're American. John says, do you know what time of day this tends to set up? Well, look, sometimes this happens on Wednesday. Sometimes this happens on Thursday, depending on when payday is. Today's the last day of the month, which is Friday. But what if you don't get paid till the 1st? So we don't even really know. But the fact that the last day of the month is on a Friday is pretty cool. Monday's a holiday, so that could screw things up. What time of day? It's when Western Union starts moving the money. It's an American company, so I don't know, 9 a.m.? But we don't know. I mean, there isn't such a thing. That's why we need to be very careful and cautious about the trade, because I don't know if they do it in blocks or all at once. But what might be cool is, what if people go to Western Union on Saturday and Sunday? Monday is a holiday, but what if it's open, but they're collecting money? And then Tuesday they enter the trade, and it's a big block trade on Tuesday. I don't know these things. I don't work there. Don't know. I don't know if people are sending money home, like you said. Maybe politics or news changes things. These are all risks, all variables. I have no idea, but I know the price I'm interested in, and if this doesn't work, I know the next price. But that's what planning is. And so if I can get a trade in at this price, which I just set you up with minute by minute. If I get it in there, then I put a stop, and then I don't know, go play mini golf, and the rest will take care of itself. So if my stop is here, which I told you earlier, right? If my stop's there, and I'm in here, or I'm in here, then I go play mini golfing, and if I get knocked out on today, I lose that much money. I don't care. It's just a trade. It's no big deal. There's thousands of trades. Who cares, right? And what if it gaps up on Tuesday when the market opens and a whole bunch of stuff has happened over the weekend on the holidays? Yeah, well, then I'll lose some money there. But it shouldn't be a big deal because you shouldn't be over leveraged, right? So you're like, oh, that's too bad. I got the exact price, the exact day I wanted. Thought it would work out, didn't work out, lost a little bit of money. Well, that's how it goes. Good thing I got 10 other things going on, right? You just move on. A trade is a trade is a trade. If you got a lot of money on it, it's going to be risky, and you're going to be praying all weekend, and you're going to be sweating bullets over a gap on Tuesday. But again, if it's exciting, if you're sweating bullets, if you find yourself praying on Saturday, not Sunday, right? If you find yourself praying over the weekend, you're royally screwing up, right? Yeah. So anyways, peace on earth. May the pips be with you. May your profits be above average. Have a wonderful long weekend. Cheers.